Good afternoon, everybody. This is Mark, and we're back here for an afternoon recap. Scott will be back tomorrow. So, this market, long day. We were down a chunk today. We obviously had FOMC meeting, and I bring up a spider chart so we can see. You know, once the meetings were released, we had that sell-off, and if you actually look at the daily chart, we came just about to our 10-day moving average and bounced right off of there. Almost an inside day. We did make a little bit of a lower low from yesterday, but I believe just a tad of a little bit of a lower low. But overall, it was an inside day. Consolidation, it's good. I know lots of people want to short, and I'm assuming you got paid on a very brief second across the board. Some things that, some sectors that actually got hit and actually stayed down. Commodities, GLD. Again, I'll put up a small 13-minute chart so you can just see the time frame. Once the FOMC meeting was released, 162.50 all the way down to 159.50. Silver, same type of move. OIH, not as much of a downward move. Now, if we go back to the daily chart on gold and silver, which we've been talking about trying to find bottoms, they a little sloppy today. Doesn't mean a bottom's not in, but at the same time, they're not going anywhere fast. So you just have to understand you don't need to pay up for certainly the ETF or the actual price of gold in general to get paid. It's going to take some time. It's going to be a slow, painful process most likely. Now let's go back to best in breed. Apple. You almost can't do a show without you can't talk about the end of the day without Apple being involved. CNBC certainly cannot talk about 20 minutes that goes by without Apple being involved. So what do I see? I see, you could say it's a little bit of a doji that possibly, could use a rest. I would agree with you. But the people that are looking to short this stock and continually look to short it and say it's overvalued, it's just not there yet. I'm not seeing on a technical pattern. Understand, I don't use the fundamentals. I understand about the fundamentals. We don't use them as that little gauge. But technically, which is a lot better timing tool, is not ready, and it's not showing it. We were up $10 today, $10, $11 today, new highs, new all-time highs, and the market was down. I don't know where that's saying that, that the top is in or we're getting close, but I heard it about 17 times on CNBC today that when you have analysts upgrading, to 1,900, that a top could be in. There's an argument there both ways. I don't disagree with that. But at the same time, let the market tell you, let the charts tell you that it's close and it's ready. It's not there yet. Another best in breed today. We were all over it and we were talking about it. It was holding its 10-day moving average on the way up, and it rested for a few days. Priceline. Not everybody can trade it. It's very tough. It's thin. But at the same time, it's a best in breed stock, and it was up another 20. It was up $20 today, and I know we were talking about it all over the chat. So I think it's just something. It's a go-to stock at this point in time on any sort of consolidation. CMG took a little bit of a break. I think that might be the go-to stock tomorrow. Something to keep an eye on. Something on the radar. Hovering above its 10-day moving average, and at some point it's going to be up and away. You gotta buy these stocks on pullbacks. That's how the market's paying people. That's how it's reacting. And understand the stat I think CNBC put out. The last 8 days, we've been down 6 of them. So, we're doing nice consolidation, which is important. Understanding we haven't had that big, drastic, washout day that I believe everybody's looking for. I just don't know if it's in the cards yet. Other high beta, Amazon showed early strength, petered out very quickly. Netflix on a downgrade showed decent strength. Obviously, at the end of the day, showed a little bit of weakness. I still think Netflix is trying to find a little bit of bottom against 110, and you can go back to the 60-minute chart, and you can just see, touched it. 110 was where I was looking for it. I probably got involved around 111, but made a nice move to 114 and took a break at this point in time. Still doesn't look the best, but at the same time, it's always on my radar, especially now that I was looking to buy it at 125, and now it's at 110. It just gives me a little bit of a discount on 112. Banks, I know I was talking about them this morning that I liked them, and I still like them. Nothing has changed except we're getting them for a discount. Now, Goldman, I was saying, Goldman and BAC were the two I talked about as laggards. Don't look as good on the chart. And you could see they tried to dent a little bit of the moving averages, went right below its, I believe, 20-day, but it closed right at its 20 days. So I think it's still intact. BAC, much of the same. And then you look at JP Morgan and WFC that I put up briefly. They look great. No impact. So the next time the banks rally, WFC and JP Morgan are the ones to go to. And they're best in breed. We're clearly showing it. They're at multi-year highs. And when that happens, when stocks get to multi-year highs, you expect bigger moves to come over the next few weeks to next few months, which is what I expect to happen. The ag sector was strong early. Didn't really trade it much, didn't talk about it, but at the same time, it does look pretty healthy. Monsanto, I just mentioned. Mosaic, not much for us to talk about. AGU looks okay. And then, CF and POT tagging along. Not a whole lot of movement there, but something definitely for us to watch from a sector by sector point of view. Home builders, I mentioned in my morning meeting. I know they all closed a little bit of green, 3 or 4 days down. That's the pattern we're getting off these moving averages. 3 or 4 days down in these stocks, in industries that are uptrending. Get involved on the on the 3rd or 4th day down, and right into moving averages with some timing tools in place. That's where you're getting paid. And if you're in it for the swing, it might be something that you can probably hold on to for a few days for another day and a half, 2-day up move, and maybe even longer. But these are the trades I'm looking at. Len is obviously best in breed at this point in time. Overall, spiders intact, inside day. IWM, like another non-event, little digestion. To me, this looks, the Russell looks a little bit like it needs to digest a little bit more. So wait and see. Qs, same. Just digesting at the top end of its trading range. No sign that we're really in for some trouble, but at the same time, you got to always be prepared. If today is not any indication, you always have to be prepared. Two other standouts I would talk about: Visa and MasterCard, both made yearly highs. Touch yearly highs in Visa. MasterCard actually closed at a yearly high, a new high for MasterCard, and actually a new closing high for Visa also. So something to keep on the radar for tomorrow. I already had 2 days up, but a little more consolidation around this 120 area. I think both for Visa, look at your weekly chart, and there's nothing on the weekly, which means it can go a whole lot higher. And let's go back to the MA. Same, at all-time highs. At this point, it's sort of just, off and away. So overall, guys, I'm not bearish. I'm certainly more on the bullish side. I try to be optimistic both ways, and really, when I do my research at night, I'm certainly trying to look hard for some good shorting opportunities. I find them few and far between, but at the same time, you have to have some on the radar. You have to have some ideas that are in play that you can lean on in order to take advantage. And obviously hedge yourself if, God forbid, we do have another 100-day point down move, because I know most people are riding the longs and not really fighting this trend, which is good. The last trade I will talk about is the TBTs and TLTs. TLTs finally rolled over again. Now we'll probably hold its moving average for the second time, and then at some point it'll probably break 110, 109.50, and probably head down to 105. I still have the options, the puts on the TLTs. TBTs I did get out of, unfortunately, and it looks like it's nice consolidation right off its lows, and against 1980, looks like a move to 23, 20 to 5 could be in the cards. I'm not going to be here in the morning, but again, I think the trend is your friend, and if you've been taking advantage of this market and understanding how it's happening, you're playing on the right side. Understanding in 2 weeks we're going to have earnings. You're going to have lots of individual plays out there for us to take advantage of. Right now, the macro market seems to be resting with lots of little individual standouts across the board, and it's your job to really start figuring out where you want to be. Good luck tonight, or have a good night tonight. I'll see you all tomorrow.